We're here at the Beryl Elites Conference in New York City, and I'm joined by Greg Grimaldi from Next Investors. Greg, thank you for joining us.
Thank you. Thank you.
To kick things off, you want to tell us a little bit about Next Investors?
Yeah, thank you. And thank you very much for having me here. I really appreciate the time. Next Investors, what is Next? Next invests in growth companies. We make equity investments in companies that serve the financial services institutional capital market space. Our investments are form of exchanges and marketplaces, software vendors, and data providers.
Excellent. And what do you find most attractive about this specific sector?
Well, I think this is a really phenomenal sector. It's really interesting and there's two real major reasons. The one is this sector is increasingly dependent upon technology to meet its core trends. The core trends of increasing complexity, increasing need for efficiency and cost cutting, and also increasing need to meet complex regulatory demands and to deliver investment returns for their customers. And so they're increasingly required, the market participants, and those market participants are insurance companies, hedge funds, asset managers, investment banks, wealth managers. They're increasingly using technology to do what they used to do manually. And the second is their increasing ability and willingness and need to use third-party technology solutions, where they once used to build something themselves and in a silo. They're now much more likely to, and increasingly likely to, utilize third-party technologies that can be easily interoperable with their counterparties and their customers, and updated quicker and require less in-house staff. Those two trends combined make for extremely fertile ground for growth equity investing if you know how to navigate the ecosystem.
Great. And we're seeing a lot of the conversations here on technology disruption and how it impacts financial services. So in this space, which is very competitive, how do you think Next is positioned favorably?
Yeah, I think we're really well positioned. I think the number one reason, we've been doing this for 24 years together as a team in this strategy. So that gives us two really big. One is the ability to put into context the new investments that we're looking at with what's worked and not worked in the past. And even though the kind of macroeconomic trends have changed and the individual technologies being delivered have changed, and the kind of core internet and cloud and all of the kind of macro technologies have evolved, the element of what is possible and what makes for a successful growth investment in this stage really kind of has stayed consistent. And our ability to utilize that contextual knowledge is a key advantage for us. And the other element is our network. So over these kind of 24 years, we've built this really strong network of industry professionals that helps us navigate the whole environment. And that's not just bankers or consultants, it's first-hand industry executives in operational roles. So they're in the front office and management, they're in operations, they're in compliance, they're in risk, they're in technology and in IT, and our ability to kind of walk across the major providers and the major kind of technology vendors into this space has really given us a lot of assistance in identifying new investments, in diligencing the technologies that they use, in introducing our portfolio companies to new customers, and positioning them well for exit.
Great, thank you for that. And in closing, do you have any thoughts on the road ahead? What are you looking forward to?
I think in our market, there's kind of, I think there's two interesting broader trends. One is this kind of connection between information and actionability. So often in the capital market space, you kind of take in information and knowledge, trade data, historical, macro, current data, you kind of synthesize something, and then you go in action, do some action, you take a trade, make a trade or adjust a portfolio or something. And those two are very distinct, right? You might, use a lot of technology, use a lot of cloud work, and then separately, manually make a phone call or place a trade. Now you can push those things together and kind of click to buy. And then the second thing I think is the ability of market participants who are professionals but not technological professionals to utilize technology without having technology people kind of in between. So a business analyst can perform very complicated analytics without a data scientist. that's all automated. It's all delivered as a service in a business-like way. Those two trends, and the companies that are delivering, utilizing those channels are winning.
Amazing. Thank you for those
No,
insights.
thank you.
Greg Grimaldi
Appreciate it.
from Next Investors, and we're here at the Beryl conference in New York City.
Thank you.